One space which is going to be in focus undoubtedly is going to be banks, the whole BFSI space after the RBI bonanza that we saw on Friday. Ashok Chandra, MD and CEO of Punjab National Bank, with us to speak more on this. Mr. Chandra, thank you so much for your time with us here at NDTV Profit. Pleasure to speak with you as always.
Thank you.
It's definitely a double bonanza in that sense. The CRR cut as well as a 50 basis points, because everyone was penciling in a 25 basis points. Tell me, what kind of a tailwind does this give you?
The cut in the repo rate by 50 basis point and already earlier in the two slots, a 25 basis point cut had already happened. So I think with this cut, 100 basis point cut has happened in the last 4.5 months. I think definitely that will trigger the credit growth, and especially the RAM growth will be very, very fast. Corporate book also, in fact, if I can talk about our bank, we had 1,35,000 crore of sanction book, including the last year sanction and this year's sanction, which we have done. And the offtake was not happening. Definitely with this rate cut, I am very sure that corporate also will come forward and they will take the benefit of this rate cut. So I am very bullish that with this RBI very, very calibrated move, definitely the credit growth will happen in the system.
From a PNB perspective, Mr. Chandra, what are you seeing as the impact on margins going forward? Because, very quickly we will see rates getting cut and then maybe deposit lending rates first and then maybe deposit rates coming in. Will you be announcing a rate cut on the lending side? What is the kind of lag that you see and what is the margin outlook?
This 50 basis rate cut we have already passed on and it is effective from today. Okay. We have already announced also. So all my repo-linked rates will be reduced by 50 basis point from effective from today. And earlier also the 50 basis point cut which had already happened, that also we have already passed it to the customers now. Yes, you are very right that in the short run, and especially for the Q1 and Q2, if I can just guess, definitely there is going to be some impact on the NIM. And I'm expecting that we have calculated that around 3 to 4%, 3 to 5% impact will be there on the NIM. But I'm very hopeful that the deposit rate also, we are going to have the ALCO meeting and then we will decide about the deposit rate cut for all the segments going forward. And another bonanza with the RBI had given that 100 basis cut in the CRR, and that will effective from the September onwards. That also will bring some liquidity in the system. And we all know that whatever the money that was parked in the RBI by way of CRR, absolutely we were not getting any interest on that. So RBI has done a very good move that one way they have cut the repo rate and at the same time they have given the cushion to all the banks to make out some income out of the release which will happen out of the CRR cut. So I'm also expecting that from September onwards, in the 4 slots, the CRR cut will happen. And expecting that around finally after the 4 cut, 15,000 crore of the amount will be released in our bank. Right. And that amount definitely we are going to deploy and we will make some money out of that. Got it. So I'm expecting that from Q3, Q4 onwards, definitely the NIM shrink which will happen in the Q1 and Q2, we will be able to make good of that loss which will happen in this Q1 and Q2.
Okay, thank you so much, Mr. Chandra, for that clarification, and good morning to you. Alex is here. This is Alex here. So I just want to understand, you spoke about the increase in lending potentially on the corporate side as well. I just want to understand to what extent are you going to grow in line with the market or with the banking industry as a whole? Where do you see that on the back of this adjustment in the policy that we've seen?
If you see our last year performance also in the credit, we had grown by 13.6% in the credit. And yes, I think with this rate cut, I'm expecting that definitely at least 1 to 2% growth will happen in the credit offtake. Definitely the RAM sector and our push is also there on the RAM. So RAM, we will be growing at a faster speed. And definitely the corporate book also, which had shown the last year growth of around 10 to 11%, at least 1 to 2% growth should happen in the corporate loan book also in this financial year.
Sir, on the retail book, I'm just wondering between MCLR and EBLR, what is the split for your bank right now? And is there migration taking place?
See, as on today, we have 42% of our loan book under the repo-linked, RLLR we call it. And remaining is under the MCLR and the base rate and all. So around 50% is linked with the MCLR. And with the deposit rate cut, definitely we will be reducing our MCLR loan book also.
Okay. But you anticipate that that will take more time, maybe 3 or 4 months, and to that extent, NIM protection will be there?
No, I think since the rate cut has already happened, 100 basis point has happened if I take the 4.5 months repo rate cut. So around 10 basis cut, we have already done the MCLR reduction. And with the ALCO meeting going to take place, I think we'll take a view on the MCLR front also. And I think very soon that also will be announced by our bank.
Okay. Just want to check, sir, because we still have a considerable amount in SLR as well. And here we're talking about long-dated securities. And of course, I understand that a lot of that is hold to maturity, but there will be some benefit from treasury operations. Have you anticipated what the benefit will be in the first quarter, sir?
Yeah, if I can talk about my bank, I think definitely we are going to take a lot of benefits out of that because our CD ratio is around 71%. So we had book and a lot of good book under the treasury in the month of March. And definitely with the lower interest rate scenario, if you have a strong treasury book, definitely the treasury is going to support in a very, very bigger way in the operating profit. And I'm very bullish about that also.